just draw out a little chart for a second. If you draw out a little chart, this is a teaching thing, guys. It teaches you what's happening, right? So if we draw a little chart here, and obviously we've got some prices, so we could say, right, $1,780, $1,789 here. So they've bought 6 futures. So obviously they've got a profile that looks a little bit like that on 6 futures, yeah? And this price here was $1,780, $89, yeah? They also sold a call option. But they sold a call option way up here, didn't they? They sold a call option away up here. So obviously they lose money. They lose money if the price drops. But they're obviously getting a premium from that call option, aren't they? So they pick up a premium on this trade. They pick up a premium. Now, obviously, what they're expecting is they're not expecting gold prices to go above 22.75, of course, because if it goes above 22.75, they've got an outright position that they're losing money on, on 50 contracts. That's a large loss. That's a large losing position that they've got there, right? It's only offset by 6 long futures. But they've obviously used that premium to buy some protection on the trade. You can see they bought a put option way below the market at 1450s down here. If you've got a put option, obviously what happens is that you make money if the price drops down from those levels. You make money, right? And obviously on this one, you lose money if the price rallies. You lose money if the price rallies. So when you start looking at this as a trade, not as a trade idea, and you start looking at where the profit and the loss is and what offsets what and how and all that kind of stuff, you start thinking about the way that this trade kind of develops out as a possible process. You know, that's ultimately how the price eventually evolves, depending upon how the price develops on a P&L scale basis, of course. So you've just got to, it's a good learning thing, guys. It's a good thing to kind of think about what they're doing as a trade, just from a pure learning point of view of trying to understand what they're doing. It might not be have any use whatsoever to anybody, right? You might look at it and say, what the hell, I don't know what this guy's up to. I don't know what they're doing. It doesn't matter. It doesn't matter if you know what they're doing. What you're trying to do is try and learn what it is they're trying to do with that spread trade, and learn what it means potentially in the future. If you see spread trades like that, what does it mean for gold? What is their overall view of that market, of course, and how could it be? How could it make you make a decision? How could it make you make money? How could you use that information? Now, obviously, the buying of 6 gold futures could simply just be to hedge out their deltas that are available in that trade. So it might just, the 6 gold futures looks like a delta hedge, doesn't it?